Since putting in an over 35-year low against the US dollar in October, the British pound had rallied 17% up to a recent high November 25th. It's important to note that when the low was made, there was a confluence of factors that included political turmoil, an impending recession due to exploding energy prices, and an aggressive US Federal Reserve. Several things appear to have changed, most notably a growing belief that the Fed is approaching a pause as domestic economics begun to soften. The U.S. CPI data, which showed a slower than expected year-over-year read of 7.7% on November 10th, compared to a higher than expected UK CPI of 11.1 on November 16th. Currently, the U.S. Fed funds rate has been raised to 3.75% to 4%, while the relative UK bank rate stands at 3%, suggesting that the BOE has room for further rate hikes. Now, in a recent speech at King's College, the BOE's Dave Ramsden said, "If the outlook suggests more persistent inflationary pressures, then I will continue to vote to respond forcefully," and that he expects that further increases in the bank rate are going to be required to ensure a sustainable return to inflation target. Expectations are for the BOE to increase the bank rate by 50 basis points at the December 15th meeting on the way to a terminal rate of 4.25%. Now, cmegroup offers three different size currency contracts, the standard, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micros in these examples. If a trader believes that the BOE will increase their rate hikes and that the British pound could continue higher, they could express that by buying the December micro British pound futures contract at 1.1994 and target a move to the August highs of 1.2300. A stop for this trade could be placed below at 1.1780. Now, this trade could make $191.25 if the target is reached and risks $133.75 if stopped out at your level. Now, if a trader believes that the British pound may head lower from here, they could express that by selling the December micro British pound futures contract at 1.1994 and targeting a move to the November lows of 1.1200. A stop for this trade could be placed above at 1.2450. This trade could make $496.25 if the target is reached and risks $285 if you're stopped out at your level.